Dollar General here this morning as we've been tracking those shares. They are on the move, and that is after JPMorgan cut its rating on the discount retailer from neutral to underweight and reducing their price target to $116. That's down from $132. Now, the analyst is now forecasting a flat comparable store sales growth, saying that Dollar General's core low-income customer is acting recessionary here. You know, some of the details here, and it's really kind of part of a three-pronged or three-part combination that they outline. Pandemic-related savings, diminished midsummer for this low-end consumer, household income about $35,000 is what they look at, and saying that that's already at a stress point. Number two, persistent inflation pressures impacting that same cohort. And then number three, also impacting that cohort is the government assistance reduced by about $40 billion in March and April. That includes things like child tax care credit expiration, driving tax refunds of about negative 20%, also SNAP cuts. So all of this hitting that low end, that core low end consumer over at Dollar General.
Yeah, certainly some worrisome challenges here for Dollar General. And then, Brett, that's not all when it comes to the lower income here. When you take a look at the middle income cohort, there's also some interesting notes there from JPMorgan about this, saying that they expect the excess savings there to be depleted by the start of winter. They also mentioned the resumption here of student loan repayments, that is going to be a headwind for this group, for this cohort. That could clearly, and we've seen this pointed out by a number of analysts, really affect spending patterns here over the next several months as we head into 2024. And this comes at a time that's already pretty challenging here for the retail sector, more broadly speaking. We know that many companies are struggling with elevated levels of shrink. That was pointed out within this note as well. And then also the need to rely more heavily on promotional activity, right? Consumers are very conscious of their budget. They're making strategic movements here. They're faced with these very tough decisions about what they're able to spend money on right now. So they're placing more of an emphasis on promotion, on what they're seeing on sale. So these retailers need to respond to that and put some of their items on sale in order to clear some of that inventory.